Microsoft stock is sitting at a critical level right now. The short-term charts are deeply oversold and could trigger a relief rally, but the daily and weekly charts are flashing warning signs that could send Microsoft towards its 200 moving average. In this episode, I'm going to show you the exact levels that need to break for Microsoft to rally back above $400 and the levels that could trigger a much bigger sell-off. Let's start off here with the monthly chart, and right now the price of Microsoft is at $367.34, and right now this is looking very bearish. We have a gigantic red engulfing candle here for the month of June. We still have 7 days and 21 hours before this candle closes, but if it closes like this, it's not looking good. We're getting below the 50 moving average. The next stop for us would be this 80 moving average at $325. The RSI completely rolled over from the 50. It looks like we're heading down, and on the stochastics RSI, if we zoom in, we were low, but it looks like we're getting some curvature rolling over again. So it looks like we might be dragging lower for a little bit, and unfortunately this is also looking to me kind of like a head and shoulder pattern. It's a little bit uneven, but this is a left shoulder, a head, and this would be the right shoulder if we close like this, right pretty much on the neckline. And if this is the case, the measured move to this could bring us down all the way pretty much exactly to the 200 moving average, which is at $163.14. Now, is it probable for this to happen? Anything's probable in trading, and obviously this is in the monthly chart, so this could take a while. We could fall down to the 80, maybe to the 100, rebound back to the neckline, then eventually roll over, and this could take a couple months if that's the case. The good thing is that we do have some protection here. We do have the 80 moving average as support at $325.71. We also have the 100 moving average at $283.70. So we would have to break through those levels to eventually get down to the 200 moving average, and that's if we're really bearish. Let's see if we could just hold this 50 moving average and try to get back above the 21 moving average at $441.04. If we head over to the weekly chart, we see that the stochastics are also on the way down. The RSI is on the way down, and this is very bearish. We lost the 50 moving average, we lost the 21, and we also lost the 200 moving average. You guys know that for me in this channel, if we're below the 50 moving average on the weekly, this is a bear market. And again, you can see the head and shoulder pattern here as well. The measure move to this takes us all the way down, so this is not looking good on the weekly chart either. It still looks like we might have more room to go down. Now, the only thing that could save us is that this possibly be some type of double bottom, where maybe this is one bottom and maybe we're starting to make a rounded bottom here. All of a sudden we have a double bottom and we can make it back all the way to $550. That's also a possibility. Let's see what happens by the time we reset here on the stochastics RSI on the weekly time frame. We head over to the 3-day chart. We see that the stochastics still need more room to continue going down. Again, we're below all the moving averages. This is looking bearish. You can see the downtrend here. We double topped here last year, and ever since then we've just been trailing all the way down. We head over to the daily time frame. This is also looking bearish. The stochastics are also rolling over. This is also looking kind of like a slanted head and shoulder, left shoulder, head. This could be the right shoulder. As you can see, this slanted here. The measured move to this could take us all the way down to about $294. So that will be below $300 if we cannot make it back above this 21 moving average and ultimately above this 200 moving average. We head over to the 4-hour time frame. You guys can see the head and shoulder pattern a little bit more clearly. Left shoulder, head, right shoulder. Again, below all the moving averages, and this 21 moving average crossing down on the 200 moving average is very bearish here. Stochastics still need time to reset, and on the 1-hour time frame here, the stochastics were on the way up. We did get some bullish divergence, but not much happened with that. We weren't really able to get above the 21 moving average. We're still below all the major moving averages. If we zoom in here on the stochastics RSI, this kind of looks like it wants to roll over. So again, looking for more downside here on Microsoft, and on the 15-minute time frame, stochastics are toppy. We're on the way down, and there's no sign of getting back above the 200 moving average. We haven't been above the 200 moving average pretty much since the 3rd of June. Ever since then, we've been rolling over. So right now, guys, we need to hold support, and we got to get back above this 200 moving average, at least on the 15-minute time frame at 387. If we could do that, we could start working our way back up to maybe this 200 moving average on the 4-hour time frame, get back to 400. But if not, it looks like we could be breaking down to 350, 325, eventually 300. And as you guys saw on the monthly chart, worst case scenario, we could even get below $200. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.